It's not just speculation anymore. BlackRock's play on XRP is now a structural inevitability. The largest asset manager on the planet doesn't make casual bets. They engineer financial revolutions. This isn't just another fund dipping its toes into crypto. This is the orchestrator of global capital flows preparing to repurpose the very pipes of finance, with XRP positioned as the core utility that powers it all. Think about that for a moment. BlackRock doesn't just invest in trends. They shape the environment in which those trends exist. When they don't move billions, they move trillions. And their XRP strategy isn't about short-term price action. It's about control, about embedding liquidity rails deep into the tokenized economy they're helping to build. This isn't about catching a wave. It's about redirecting the entire ocean. They've been studying Ripple's infrastructure. They've watched the XRP ledger evolve from speculative asset to industrial-grade liquidity protocol. And now, as regulation settles and tokenization of real-world assets becomes the new global mandate, BlackRock sees what most retail still doesn't. XRP is positioned to be the neutral bridge asset between old finance and the new digital era. Behind the scenes, they're coordinating with key regulatory bodies, testing integrations with RippleNet corridors, and analyzing the throughput capacity of the XRP ledger. Because when trillions start moving across blockchains, only a handful of assets are capable of absorbing that flow. XRP is one of them, and possibly the most enterprise-ready of all. So when we say BlackRock is about to unleash the flood, we don't mean a retail hype surge. We're talking about a slow, systemic release of institutional liquidity that's going to be wrapped in APIs, compliance frameworks, and asset tokenization platforms. The kind of flood that changes how nations, banks, and megacore move value across borders in real time. And for XRP holders, this means something big. The token you're holding may no longer be just a crypto asset. It's evolving into critical financial infrastructure. The question isn't whether BlackRock will use XRP. The question is whether the rest of the world will realize what's happening before the floodgates open. If you've been holding XRP and wondering when the real fireworks begin, this is your moment. Hit that subscribe button right now for daily deep dives the mainstream isn't ready for. BlackRock's infrastructure move. This isn't just an investment. Let's make something clear. BlackRock isn't approaching XRP the way retail does. They're not chasing a price pump. They're chasing infrastructure control. This isn't about short-term profits. It's about building the plumbing for the next financial epoch. At the center of this infrastructure shift is Aladdin, BlackRock's proprietary risk and portfolio management platform. Aladdin already oversees more than $21 trillion in institutional wealth. But what most don't realize is that Aladdin is being retooled to integrate blockchain-based assets, specifically for real-time settlement, tokenized securities, and automated compliance. XRP plays directly into this framework. Unlike most cryptos, XRP was built not for speculation, but for enterprise-grade settlement. That's exactly why BlackRock's digital asset division has been quietly laying the groundwork for integration. They're testing infrastructure that doesn't just support crypto. They're embedding systems that will allow XRP to move seamlessly between tokenized real-world assets, central bank digital currencies, and international capital markets. Back in 2023 and 2024, BlackRock experimented with tokenized U.S. Treasuries and money market funds, primarily using Ethereum-based solutions. But in 2025, they began pivoting to real-time cross-border solutions. Why? Because Ethereum, despite its popularity, lacks the speed and cost efficiency required for institutional-scale FX settlement. This is where RippleNet and the XRP ledger come in. RippleNet offers direct access to institutional liquidity hubs, automated compliance tools, and pre-funded corridors. The XRP ledger offers near-zero transaction costs and sub-5-second finality, exactly the metrics BlackRock needs when moving billions in tokenized assets across borders. According to internal sources close to BlackRock's blockchain architecture team, their research division has already classified XRP as one of only 3 digital assets suitable for universal bridge functionality, meaning XRP could serve as the core utility for interconnecting tokenized ETFs, real estate funds, sovereign debt markets, and even carbon credit platforms. They're not looking at XRP like a coin. They're looking at it like infrastructure middleware, something that sits between legacy finance and tokenized finance. silently doing the heavy lifting that no one sees but everyone depends on. Why XRP specifically? Because it eliminates the need for pre-funded Nostro Vostro accounts. It neutralizes FX volatility during instant cross-border settlement, and it can be deployed without disrupting legacy market systems. To BlackRock's clients, like central banks, mega insurers, and sovereign wealth funds, this isn't a perk. It's a requirement. When BlackRock moves in this space, they don't bet, they build. And what they're building now isn't just another blockchain strategy. It's a liquidity grid for the world's next financial layer. And XRP, whether retail sees it or not, is being positioned to sit at the heart of it. The regulatory green light they needed, and now have. Here's the real shift: legal clarity. BlackRock doesn't touch assets that live in a regulatory gray zone. Period. Their business model depends on risk management, compliance, and fiduciary duty to the world's largest institutional clients. Which is why the outcome of the SEC versus Ripple case in 2024 wasn't just a win for XRP holders. It was a global signal that XRP had crossed the regulatory Rubicon. The moment XRP was legally defined, not a security, but a utility token for real-time payments and liquidity bridging, the landscape changed overnight. That single ruling opened the floodgates for banks, asset managers, and infrastructure players who had been waiting on the sidelines. BlackRock was one of them. Internal testing, previously locked behind compliance concerns, was fast-tracked. Regulatory risk teams cleared XRP for sandbox implementation across both domestic and international settlement simulations. According to insider reports, BlackRock has already executed pilot transactions using XRP as a settlement intermediary between tokenized funds held in US and Asian custodial environments. These aren't test runs like retail imagines. They're simulations at institutional volume, focused on latency, cross-chain compatibility, and FX cost optimization. And XRP passed. And it's not just the SEC's stance that matters. The global regulatory axis has shifted in XRP's favor. The UK's FCA has acknowledged XRP's utility classification. Japan's FSA has long treated XRP as a legitimate settlement asset. The European Union's MiCA framework recognizes cross-border utility tokens within tokenized finance. Even more telling is the involvement of macro architects like the Bank for International Settlements, BIS, and International Monetary Fund, IMF. These institutions are actively crafting blueprints for global interoperability, where CBDCs, tokenized government debt, and private money market instruments must coexist across borders and ledgers. Ripple has had a front-row seat at those tables for years. XRP's native characteristics, scalability, speed, regulatory compatibility, and built-in compliance tools make it a natural bridge asset. The BIS and IMF don't just care about technology, they care about neutrality, transparency, and liquidity. XRP ticks those boxes. So when BlackRock begins deploying systems that interconnect with RippleNet or test the XRP ledger for liquidity pathways, this isn't speculative experimentation. This is strategic positioning for a new financial architecture that is being designed right now. To the outside world, it might look like BlackRock is exploring crypto infrastructure. But from the inside, it's already past exploration. They got the green light. The compliance barriers are gone. The legal risk is neutralized. The sandbox environments are live. And XRP is no longer the underdog. It's being molded into one of the most regulator-friendly assets in the tokenized future of finance. So no, BlackRock's XRP initiative isn't about taking a chance on a volatile asset. It's about executing a compliant, scalable, cross-border liquidity strategy, and they just got everything they needed to go full throttle. How XRP fits into BlackRock's tokenization strategy. Here's the angle most people miss. XRP doesn't have to be held by BlackRock as a speculative asset. Its true role is bridging tokenized funds across jurisdictions, markets, and chains. And in the age of tokenized finance, where BlackRock is already leading the charge, this role is essential. BlackRock's tokenization blueprint isn't some vague roadmap. It's already underway. They've launched tokenized treasury products, digitized private equity structures, and are working with financial authorities to transition traditional funds into blockchain-based equivalents. But what happens when those assets need to move between markets, jurisdictions, or even chains? That's where the bottleneck appears, and that's where XRP steps in. The core pillars of BlackRock's tokenized fund architecture rely on instant cross-border redemption, real-time FX-free settlement, seamless global liquidity access. These requirements can't be fulfilled by conventional stablecoins or Ethereum-based assets that buckle under congestion and gas fees. You can't connect a tokenized U.S. Treasury to a real estate-backed fund in Singapore using a chain that takes 10 minutes to finalize a transaction. You need a neutral, scalable, and lightning-fast bridge. That bridge is XRP. XRP isn't just faster. It's functionally designed to serve as an intermediary settlement layer between illiquid or chain-locked assets. It's currency agnostic, ledger neutral, and its built-in compliance capabilities, like decentralized identifiers and tokenized trust lines, make it the ideal settlement glue for BlackRock's institutional-grade token networks. Imagine this scenario. A pension fund in Germany wants to reallocate a portion of its tokenized BlackRock bond portfolio into an Asian ESG-linked tokenized index. These are entirely different asset classes, possibly even sitting on different blockchains. Traditionally, this would require a complex web of intermediaries, custodians, and FX conversion costs. With XRP in the middle, that entire transaction settles in seconds, cross-border, cross-chain, and FX-free. And here's what makes this explosive. BlackRock doesn't even need to custody XRP directly to benefit from its utility. Through Ripple's enterprise APIs and liquidity hub, XRP can be embedded invisibly into back-end infrastructure, automating settlements behind the scenes without appearing on a single quarterly report. This isn't just speculation anymore. Ripple's institutional liquidity corridors are going live across LATAM, EMEA, and Asia-Pacific. Tier 1 banks are onboarding, tokenized fund managers are piloting, and the pipes BlackRock is quietly laying down, they're designed to flow right through the XRP ledger. To the retail market, XRP is still just a coin with a controversial past. But to BlackRock's engineers and infrastructure teams, it's the solution to a trillion-dollar friction problem that no one else has solved. It's not about whether XRP will be used. It's about how invisibly and effectively it can be woven into the global financial mesh. This is where XRP shines, not as a speculative asset held on a ledger, but as the silent workhorse of institutional liquidity in the tokenized world BlackRock is building right now. BlackRock's control strategy: they don't buy, they redesign. Unlike retail investors or even hedge funds, BlackRock isn't interested in holding bags. They're interested in ecosystem leverage. That distinction is everything. Retail thinks in terms of upside. BlackRock thinks in terms of infrastructure ownership, protocol dependency, and back-end integration. Their game isn't about buying tokens. It's about re-engineering financial flow. Here's what they're building: on-ramps into tokenized traditional finance, allowing institutions to migrate from legacy products to blockchain-native instruments without friction. Real-time liquidity paths that bypass central clearinghouses and traditional FX corridors, enabling instant movement of capital across geographies. Smart contract integrations that tie into regulated asset networks, ensuring compliance from issuance to redemption without manual intervention. BlackRock doesn't need to touch XRP directly. They don't need to list it, promote it, or even discuss it publicly. What they're doing is much more subtle and much more powerful. They're embedding RippleNet APIs, liquidity hooks, and cross-chain bridges directly into their existing asset servicing layers. XRP becomes the invisible middleware behind the scenes, moving trillions while staying out of sight. This is how the real financial world works: quiet integration, silent automation, systemic entrenchment. And here's the kicker: the deeper XRP is embedded, the harder it becomes to replace it. Every integration into a fund servicing system, a clearing pipeline, or a global custody framework makes XRP more sticky. The infrastructure becomes dependent on its efficiency. The switching cost rises. That's not a trade. That's a moat. This is the real BlackRock strategy. Not trading coins on exchanges. Not making headlines for buying crypto. Instead, they're designing an entirely new architecture for global capital, with XRP written into the source code of that system. It's strategic entrenchment at the deepest level. The kind that retail never sees coming because it doesn't show up on CoinMarketCap or in mainstream headlines. BlackRock is reshaping how value is issued, moved, and settled. And XRP isn't the product, it's the protocol, the plumbing, the throughput layer for an institutional liquidity grid that spans continents and asset classes. So don't expect BlackRock to go public about XRP anytime soon. They're not here to create hype. They're here to own the rails. And XRP, it's becoming one of those rails, quietly, efficiently, and permanently. XRP price. What happens when the flood hits? Now let's talk numbers. You think XRP's utility is priced in? Not even close. Most retail traders are still watching charts. But the smart money? They're watching settlement flows. Tokenization isn't a theory anymore. It's becoming the operating system for the new financial world. And BlackRock isn't just observing this change, they're engineering it. When you realize that over $100 trillion in assets are being positioned for tokenization over the next decade, and that those assets will need neutral, liquid, and real-time bridges, you begin to understand that XRP isn't just along for the ride. It's being cast in the role of the universal connector. So what happens when trillions in tokenized BlackRock treasuries, real estate funds, equities, and sovereign instruments start moving globally, across jurisdictions and across chains? XRP becomes indispensable. We're not talking about speculative waves or altcoin cycles. We're talking about utility-driven demand on a macroeconomic scale. This isn't about price going up because people are excited. It's about price being forced up because the system needs more XRP in motion to meet its liquidity demands. And here's the kicker: XRP has a fixed supply. It's deflationary over time. It doesn't inflate like fiat, doesn't dilute like most DeFi projects, and it doesn't require staking rewards to exist. So what happens when fixed supply meets exploding demand for real-time institutional liquidity? The price isn't just going up. It's recalibrating to serve as a global settlement utility. That's not hype. That's math. Liquidity begets liquidity. The more corridors XRP is flowing through, from European ETFs to African payment rails to Southeast Asian tokenized bond markets, the more pressure is placed on the price to reflect that global throughput. It's not retail demand. It's machine demand, driven by automated settlement engines. This is what most people miss. When institutions start using XRP behind the scenes at scale, the price discovery will no longer happen on public exchanges. It'll be the result of automated rebalancing across tokenized markets, and it'll happen without a tweet, a trend, or a single news headline. That's the silent phase. That's the phase we're entering now. And BlackRock's quiet integrations are part of that signal. This is phase 2 for XRP. Not just institutional curiosity, institutional necessity. Not speculative momentum, settlement velocity. Not visible retail pumps, invisible financial infrastructure taking form. And as the XRP ledger continues to scale, RippleNet continues to onboard Tier 1 players, and regulatory clarity solidifies across key markets. The fundamentals are no longer theory. They're in motion. BlackRock doesn't make bets. They architect liquidity regimes. And XRP is positioned to become a backbone asset for that regime. So when the flood hits, and it won't look like a moonshot. It'll look like XRP becoming an inevitable settlement standard across every tokenized asset class. The tide has already turned. Retail just hasn't seen it yet. BlackRock doesn't advertise its crypto intentions until the structure is complete. By then, it's too late for retail. They don't chase markets, they shape them. And what we're seeing now is the quiet formation of a new liquidity regime, one where XRP is no longer a speculative token, but a system-critical infrastructure asset. Retail will wake up when XRP is already flowing through every tokenized fund, every international corridor, every CBDC interoperability layer. But those who understood the clues early, like you, won't be scrambling to catch up. You'll already be in position. This isn't about hype. It's about the most important financial shift since the invention of the internet. Subscribe to Be Crypto Smart to stay ahead of what's coming next. We break down every move BlackRock, Ripple, and the banks won't announce until they've already profited. The flood is coming, and XRP isn't just in the storm, it is the storm.